Hello, everybody. Welcome back to Real Results with Rehab Reserves. Today, I'd like to go over a couple things that I see very commonly with clients that want to work with us. So, number one, as I've discussed in previous videos, your personal credit is the foundation to getting unsecured business funding approved. And a couple things that you want to definitely keep in mind to optimize your personal credit. Number one, the buy now, pay later, the affirms, pay over time promotions that you sometimes see when purchasing products, where it's, hey, don't pay any interest, for 3, 6 months, monthly installments. Whenever you do accept one of those offers, it reports to your personal credit as a personal installment loan under the personal loans section. So this will do a couple things. Number one, it's going to throw off your average account age. So if you're opening up a lot of these accounts, they're going to report as new accounts on your personal credit. It's going to throw off your debt to income ratio, average account age, which is going to in turn lower your score and put you in a weaker position as a borrower. So I would recommend against using those tools for purchases, I'd say under 500, even $1,000. If you have to replace an HVAC system or a roof repair or something like that, it's going to cost you a couple $1,000. Taking advantage of that type of product could make sense, right? No interest over a 6-month period, monthly payments. You break it up into bite-sized chunks. That makes sense. But if you're using that feature for smaller purchases just because you don't want to pay for it up front, I'd recommend against that, right? And then also too, if you have to use that feature for those smaller purchases, you're probably not making a wise decision with your spending if you can't just purchase the product up front with a credit card. That's my personal opinion. And I've seen this happen plenty of times with clients. And the recommendation would be before they work with us or apply for anything for that matter, is pay off those accounts so that they close and they're no longer reporting as an open account, throwing off your average account age. Number two is making sure you have established personal credit. For those of you who are younger or just went through some credit repair and you've got a bunch of accounts removed off your file and closed and you want to reestablish credit, the goal is obviously get personal credit cards that are unsecured from large national banks such as Bank of America, Chase, US Bank. You can even throw American Express in that category, Navy Federal, USAA, Regions. Any type of card that's coming from these big players, that's going to hold more weight than even store cards, authorized user cards. I'd even throw Capital One in that bucket. Capital One cards don't hold all that much weight on your personal credit. And when you do, get offers for store cards, keep in mind that those accounts do report to your personal credit. So if you're taking advantage of shopping cards on a regular basis, those are a bunch of brand new open personal credit card accounts on your file, throwing off your account age, throwing off your average credit limit on those accounts. And if that store card, let's say, for example, has a $300 limit and you spend $300, right, which is very easy to do on a store card, that account now is at 100% utilization, which is not good on your credit. So recommendation B, don't open up store cards, right? Try to get legit cards from big national banks and credit unions on your file. Be very conservative with how often you are applying, right? So break it up and maybe apply for a new personal credit card once, at max twice a year, to make sure, again, you're in a strong position when you apply, making sure utilization is down before you apply. And then also too, the buy now, pay later, the affirm, pay over time offers. Stay away from those unless it's a larger purchase that you're making, a couple $1,000s. That could definitely make sense. I mean, I would take advantage of that too if I was, having to replace something on my roof and it's going to cost me $6,000 and I don't have to pay $6,000 immediately. I can pay $1,000 a month over the course of 6 months with no interest. Yeah, that makes sense, and it will look good on your file as a legit, good sized personal loan installment account that gets paid off in full. And then also too, on the inquiry side of things, making sure that when, again, you apply, you're not just shopping around on a regular basis, seeing what you can get pre-approved for here and there for different products, because it probably is a soft credit check, but it might also be a hard credit check, which can rack up inquiries. And to any lender, it makes you look like you're shopping around as a borrower and that you've recently been trying to get approved for some type of credit or loan, which could obviously look like, number one, you're not getting approved because if you have an inquiry on there and you don't have an account on your personal credit file attached to that inquiry, it makes it look like to other lenders that you can't get approved for credit or loans, which could throw off on the algorithm on their side that you're not positioned for one reason or the other as a good borrower. And then also too, on the personal credit side, if you have auto loan history, mortgage history, those are all good. I would stay away from HELOCs because when you take out a home equity line of credit, it reports to your personal credit file as an account, a personal revolving line of credit. And so if you take out a HELOC and you start using that HELOC aggressively, putting on large balances on the HELOC, it's going to report as high utilization on that personal revolving account, and it's going to throw off your debt to income ratio, raise your utilization, lower your credit score, and put you in a weaker position as a borrower. So personal credit cards from national banks, credit unions, those are good. Stay away from adding yourself to a bunch of authorized user cards, opening up store cards. If you can refrain from it, don't do even secured cards or secured lines of credit. Try to get the unsecured. And then number two, staying away from the buy now, pay laters and the pay over time promotions unless it's actually a legit sized amount that you're going to use for that, not a small amount. And then also too, taking out just strategically, right, different funding that you need, and making sure that when you do pull the trigger, you're in the best possible position to do so. That's exactly what we do here at Rehab Reserves. If y'all want to work with us, explore our services, have a financial review and diagnosis on where you currently stand and what you could realistically get approved for, let us know. We'll be more than happy to help. Other than that, I'll see you on the next video. Have a wonderful day.